Along with my day job running an investment business, I started Tinsley Park Talks, a global networking and leadership platform where I interview industry legends from finance to tech and great thinkers to notable celebrities. In these interviews, we discuss great ideas around investing, entrepreneurship, problem solving, and all other lessons of life. Welcome to another episode of Tinsley Park Talks.
Take a moment to please subscribe to the channel and like this video. We really appreciate your participation.
This program is in partnership with Nesh. For more information, please click on the link below. Modern-day fintech companies are playing a crucial role in shaping the future of finance. In today's episode, I interview Youngro Lee, who is the founder and CEO of one such company called Brassica, a fintech startup at the forefront of revolutionizing financial infrastructure. Youngro will take us on a journey through his entrepreneurial endeavors, including his experience of growing and exiting his previous startup. But that's not all. We'll also explore fascinating topics such as blockchain, Web3, and digital assets. Youngro will share insights on how Brassica navigates the intricate landscape of financial innovation and find its unique place in this ever-evolving ecosystem. Youngro, welcome to the show. Youngro, welcome to the show.
Thanks for having me.
Yeah, man, it's been 10 years
It's been
since
crazy.
we met.
Yeah.
The first time we met was at the Federal Reserve building here in Houston, the Dallas branch of it. You were hanging out there and I was hanging out there. There was something really important going on in the country at the time.
Yeah.
It was the Jobs Act.
It was. I mean, it's kind of looking back, it's ironic. There was an event at the Federal Reserve, which I didn't even know you can have events at Federal Reserve buildings, or at least branch offices. But the topic of that, I believe it was like a seminar or a conference or something, was literally about how do we change the financial system so we can actually create more different kinds of impact. And we'll talk about obviously how the world has changed over the last 10 years, which has been crazy amount of changes that I think 10 years ago nobody in that room would have expected was coming.
Absolutely.
Yeah.
And you're thinking about getting into the crowdfunding world because the Jobs Act had enabled private capital markets to private markets to have access to investors that were non-accredited investors for the first time. Or can you talk a little bit about
what the origin for my story, if there is such thing, is that I was an attorney to start my career in 2007, actually in New York, Wall Street. My law firm was representing the Feds in the Lehman crisis. For you remember, I mean, people have short memories, but
one of the biggest bankruptcies at that time.
That time we thought the world was going to end too,
right?
And it's ironic. I don't know if it's ironic, but we're kind of in a similar state these days. But as a first-year attorney, understanding what the heck happened from the inside, because we were literally dealing with the bankruptcy situations, it gave me a direct line into how inefficient the capital market, specifically the U.S. capital markets, as in stock market, was. And honestly, it jaded me. I just remember thinking, I do not want to, I don't want this to be my career, to work on this type of stuff for the rest of my career. But more importantly, I didn't think this was necessarily good. So around the same time, I had an opportunity fate is a big part of, I think, everyone's journey. I had a chance to work with some private equity folks in my law firm, and I loved it. I loved the idea of private equity, and I know even today nothing's perfect. So there's bad and good to any situation or any industry. But at the time, the idea of building companies, building enterprise value, building new things, and then the owners, the stakeholders winning together was so much more attractive than, frankly, the financial engineering side of Wall Street and financial system that I think has evolved, over the last couple of decades. That's it. So I did that for 8 years, and
Long time,
and this was, I traveled the world. It was kind of a glutton for punishment. I started in New York. I actually, again, crazy. I worked 1 year in Moscow, in Russia, and then I went to Asia. I was in Shanghai, Hong Kong, doing a lot of Asia private equity deals. And literally, if you think about, kind of take a step back and look at what happened in the last 10 years, it's really the advent of fintech as we know it. And it's actually the point where Bitcoin started. So the blockchain industry also started following the financial crisis of 2007.
Right.
In the Houston situation, I came back as an 8th-year attorney in Hong Kong at that point, our international law firm.
Right.
I quit because U.S. passed this thing called Jobs Act. And the Jobs Act was, for the first time in US history, any non-accredited investors can invest in any private companies. And me having worked in private equity for the last 8 years, which was basically only institutions in high net worth can invest in private assets, to me was like, let's do it, right? Like, I don't know what's going to happen in the future, but I think this is freaking amazing. And like they say, the rest is history. I moved back to Houston, and then that's when we met.
That's right.
Yeah.
So, we have the podcast title, Youngro Lee, Building the Future of Finance. That could also be Youngro Lee, Democratizing Finance.
So, the term is it's become so political, like everything else in life. But to me, that's my personal mission. I want to democratize finance to create opportunities for everyone. I think that's not a political statement. I think that's real life. Like, if you get more people into a capital market or into anything that you're working on, by definition, there's more people supporting that idea or that system.
Right.
So that's been my personal driver. And through my, at least right now, I'm on my third startup technically.
Right.
Each startup is slightly different, but at least for me personally, that's been my common denominator, is like, I'm trying to create opportunities for everyone by democratizing finance.
So when you came to Houston, your first startup was called Nextseed.
Yeah.
I remember going to several events as you're being one of the few startup fintech guys. I don't know if there was any other ones at the time, maybe, but I just knew you. And I went and supported you in several events. And I remember when your first campaign happened. Yeah. And we have to kind of talk to the audience what that means by the first campaign happened. So with that, could you please share with us what Nextseed was and what he was trying to accomplish?
It was a combination of business strategy, but also what I felt passionate about. So when I'm not a native Houstonian, I just happened to have been exposed to the city because my sister went to Rice University.
Okay,
so
that's why you came here. I didn't. Okay.
But and for those of you who are familiar with Houston, Houston 10 years ago is also incredibly different than Houston today. There's entire sections of the city that was basically nothing there, or now like it looks like they've been developed for 30 years, but they've really been developed the last 10 years. So the idea of Nextseed was, how do we enable people to invest in their community, local financing, as low as $100? So in Houston, there's entire sections of East Downtown Houston that we, Nextseed platform, literally funded some of the most popular restaurants and bars and events, and anyone can invest local dollars. And so we kind of intentionally focused on Texas as a starting point, because to your point about fintech, like, I had to win something. Like, there's no way I was going to win nationally doing tech startup financing or whatever. So strategically we chose, hey, we're going to go all in Texas because normal fintech guys don't come to Texas, but we're going to use this as a base to prove what we can do. And then when we're successful here, we're going to take it national.
Right.
And we'll talk more about the journey, but that's kind of how I started. But at the same time, like, it's something that I feel really passionate about, the ability for people to invest in things they know and they care about. And to me, a local business was as close to that tangible thing as you can think of.
So if I remember correctly, you were one of the first, we were the first debt crowdfunding platform.
We were the first.
And then just one other thing to differentiate between an equity crowdfunding platform and a debt crowdfunding platform. You were a debt crowdfunding platform. What does that mean?
I mean, so this is kind of where I think lawyers and finance professionals, if you can be really creative about things, you can accomplish a lot of things, actually, because law is not this black and white thing where, say, do X, Y, Z. It's the law is a law, and it's up to the entrepreneurs, especially if you have knowledge of the legal financial insights, to build a position around it. So the actual Jobs Act and regulation crowdfunding specifically doesn't say equity or debt at all. All it talks about is you can offer securities to non-accredited investors. And everyone in the world assumed that it was equity securities for startups. I interpret it as like, no, it's securities. So debt securities and revenue sharing securities is also a security.
Right.
And for small businesses, equity doesn't really mean anything as much as cash flow. So we designed the financial structure that we offered as a security the way we did. But kind of taking a step back, and to your point, we were actually the very first SEC registered funding portal, and we closed the first ever regulation crowdfunding offering in US history. It was actually a hotel in Austin. But that was, so this is really the start of a long journey. But what I realized back then and throughout the rest of my and still going, building a company operationally in a venture context or a startup context is in many ways so different than financing the company or growing the company. Because I always thought, like, we're in school or college or whatever, like, if you do good, or even that job, if you do good, someone's going to recognize you and reward you, right? Whether a promotion, more financing or whatever. It doesn't work that way in private markets, in capital
Right.
markets. And so that's something I learned the hard way over the years. But at least from a technical perspective, myself and my team, the one thing that I always try to pride myself and our teams on is like, you got to execute, right? Like if you don't have execution, then you don't have anything else.
Right. So I remember the product, Nextseed product. You represent, for example, just to give the audience a sense of what solution Nextseed provided and what problem it was solving. You're a non-bank financial institution providing debt capital to a local business owner, like a hair salon guy that wants to expand his businesses. So the idea was you promote this entrepreneur that you've already decided that you're going to back from future cash flows that he's going to generate at the promise of this growth capital going in. And then you're enabling that security or that debt offering to the general public. So, you know, you and I, we don't have to be, it could be a 18-year-old
anyone can invest
that can go and connect his or her checking account and put in $15 to invest in that debt offering, right?
That was the initial strategy. Obviously, we had grand visions even back then, but our starting point was MVP, as we call it, minimum viable product, was we want to create a system where we did not have either the deal or the investment capital ourselves, but we enable a simple client experience or user experience that lets people with ideas or companies that need funding, and people with capital that wanted to fund, and make that transaction so seamless that they feel good about it and they do more about it.
That was the innovation.
That was what we're trying to create. It was just that the context of the time when we started was local businesses.
Right. And there was a multiplier effect doing it this way because you're doing it in your community. And if this hairdresser is Houston-based and you happen to know this hairdresser, you would invest in this hairdresser because you're getting a haircut there and you want them to do
that was
well.
it. I mean, especially I think, really the last couple of years, I'm sure I speak for a lot of people where, let's say like the last 4 years following COVID, I think a lot of people's values have changed. I think mostly for the better. It's been a very difficult time and a lot of, not so good things happened around the world. But I think that's kind of forced people to also rethink their lives. I know I'm doing that.
Right.
And so that to me, especially in a private investment context, investment, I think, is always more than about maximizing ROI. I mean, maybe some people's job is to maximize ROI for their clients, but for each individual people, I don't think there's anyone who truly thinks of investment as like, let me just maximize it. Like there's other variables that they're thinking about, good or bad.
Hey, it's my community. I want to help my community, or I believe in this cause, or look. I remember when you were grinding it and you're building this business at the time. Hard work, man. Like kudos to you. So fast forward, Nextseed. So you said you operated it for 6 years.
We did that for 6 years.
Okay.
It was a battle. Again, because I thought I was a good lawyer, but I was not a good tech entrepreneur. And by that, I mean, I had no idea how to actually raise capital or how the VC system worked. If I did, I would not have come to Houston.
Right.
So that's kind of the things I did. And fast forward 6 years, we just talked about small businesses. The big thing that happened is COVID.
Right.
And when COVID hit, you can imagine literally every single businesses that we were working with, that we were trying to work with, that we were managing, whatever.
Yeah.
Everything went to zero.
Like the hair salon
it's not even a percentage. Everything went to zero overnight. And it was such a shock to not just myself, but everyone in the ecosystem. And for a while, we didn't care about the business. We were just trying to do everything we can to at least keep the business afloat, just help everyone whatever we can. So we did a lot of food drives and whatnot. And I think, kind of fast forward a little bit, and I do think everything happens for a reason. In retrospect, the tech industry has gained dramatically from the COVID experience. But if you remember in the early stages of experience, actually they weren't, in the early stage, everyone thought everything was going to zero, including the tech companies.
Oh, yeah.
So
it was doomsday.
Yeah. So
I gave up on life for a few months.
It's really hard to think about it. But so at the time, I happened to be, good friends with the founder CEO of Republic, which was at the time and still the largest and I consider the best investment platform for private markets because they were much more broad. They had a tech background. They had candidly better marketing than we did, and there was things that they did that I really respected. And the conclusion I had when I was struggling, once I had a breather about the whole COVID experience and just thinking about, okay, like, what do I do, right? Like, what do I do, and what does my team do? It kind of naturally occurred where we basically decided, let's do it together, right? Like, no matter what, this is not a problem. This expansion of global private markets, right? Clearly, it's not some random startup in Houston that's going to make it, change the world. Like, as much as I believed it, like, that wasn't going to happen.
You never know. If COVID didn't happen, you
maybe
been able to get there.
So the idea then was like, hey, let's do it together. Let's suffer together. Let's try to win together, and we did. I joined in 2020. We actually did several transactions because startup, everything's complicated. But in short, with the investment platform joined with Republic, I joined as chief operating officer at the time. They were pre-Series A. And this is kind of where, like, you just have to, like, let your biases go and just go for it, because what I didn't realize, no one did, was in 2020 everything sucked. 2021 is that massive jump up that we talked about, especially in the tech space.
Right.
And then a layer on top of that is a blockchain space.
Right.
That was one of the businesses at Republic and some other platforms. I happen to know a lot of individuals in that space. They did have a foothold in that space. And I always thought, like, that's really interesting. I don't know what that could be, but that's really interesting. And we had some amazing colleagues at Republic who are working on those problems. And, a lot of times in life, you also need luck. Right place, right time. We were able to raise substantial capital in 2021, going through 2 rounds of financing. And Republic itself became a unicorn and really one of the leaders of, let's call it, blockchain advisory practice and anything related to blockchain sort of infrastructure technology consulting or advisory services. And that was a huge, moment, right?
Yeah.
And it was this, and one of my things that I try to live by is just to not be so up or down based on external events, because COVID, on one hand sucked and it was very bad. And in many ways, I completed a transaction that I might not have otherwise done. But because I did that, when this amazing good things started happening in the tech space and the blockchain space, we were able to take advantage of it with collective skill sets and resources and whatnot. And even now, you fast forward to today, like right now, the world sucks again, right? Like, there's bad things happening in the world. The market's not great.
Not in oil and gas. Right now, oil and gas is doing really
Whatever
well.
it is, like, I just tell all my friends, like, don't be so down. Like, it's like, this obviously is not going to be here forever either. You just got to keep your cool.
But when have we not been in a cycle? Like, that's what I learned in my short career so far. So that was, thank you for sharing the transition to Republic. Yeah. So they essentially came and assumed the business and took you under.
Correct. Yeah. I mean, the investment platform joined Republic,
right?
So that we can hopefully strengthen that business and expand that model. Because I do believe that the online private investment market is here to stay.
Right.
It just, once more people get used to it, and once this relates to obviously my current startup, but once there is true global adoption of the technology and the user experience that lets us feel like investing in private companies is as easy as going to Fidelity or Schwab and investing in stocks, clearly everyone will be doing it.
Right.
It's just a long game, right? It's just not going to happen overnight. And so I think that mission is still strong, but I do believe that there needs to be consolidation in that industry and really institutional participation, which I think we're actually starting to see right now.
Right. So what was the sort of understanding when you joined Republic in terms of your ability to be a free bird again, like you were, you're an entrepreneur with your own company, you're CEO, but now you're part of a big corporation. Did you know that this was a step to something else, or kind of? I guess the question here is, you're on your 3rd startup now. So Republic would be your 2nd.
Correct. Yeah.
And then you're obviously, today we're talking about Brassica, and we're going to talk more about that in a second. But how did Brassica came about?
So that's also the interesting thing. So when I did join Republic, there was a component of that partnership, if you will, which was the back end. So the thing that I struggled most, I mean, even now in forums like this, like, the sexy part is, like, you can invest in startups and invest in small businesses and make investment returns and whatnot. The boring stuff is, like, the paper pushing in the back end, right? Which is, like, how do you move money? How do you get client information? How do you do KYC? How do you do all this kind of stuff? And no one tells you that. No one tells you that. I had to learn the hard way. So specifically, when you're dealing with private assets, the simplest way to think about this is in everyone, I think, well, not everyone, most people probably are used to investing in stocks, and you go to some brokerage and you buy a stock, and it doesn't matter what brokerage you go to.
Right.
If you want to buy Apple stock, you buy Apple stock, it shows up in your account, and you just assume that you actually have it. The reality is that the back end is so standardized, so fluid across different custodians that are heavily regulated over, and it's not overnight, it's literally over 40, 50 years of history. There's even an agency called it's not an agency, a company called DTCC that basically clears everything and settles all the trades. That's why people don't feel any difference whether I traded Robinhood or Fidelity. In the private markets, it literally doesn't exist. There's nothing like that.
Right. Interesting.
And so private assets are not standard, right? A small business company stock is very different than a startup
Why
equity.
is that? Is it because it wasn't so tradable before the Jobs Act?
Yeah, I mean, even now, private equity is not for everyone. It's for institutions or very wealthy individuals, right? So basically, the system that supports that is not designed historically to support it to a broad audience.
Correct.
So because when I started Nextseed as literally the first company that was trying to do it, and the Republic as obviously one of the leaders of trying to do it, we had to build our own solutions in the back end, and there is no solutions.
Right.
The only solution we can possibly think about is go to the traditional players that kind of do something similar, and then work with their outdated systems and outdated structures and try to build a solution on top of it that kind of makes sense for us. So I have personally had to use a local bank, literally beg the bank president and folks to please let us use your custody account structures, because that's what I needed for our business. We needed a custody account, which legally is the only way any intermediaries can hold client funds and client assets for, because I can't just put your money in my own mattress.
Right.
And we had to build a tech solution on top of it. And I can tell you, even as a startup, when we raised our first, a few $1 million in my first startup, more than half of it was actually spent all on infrastructure. Sure. Like the back end services, vendor costs, technology development costs, which from a startup perspective, it's the most stupid spending of money, because I get zero, how much money spent results zero in client spending. It's not for clients. It's like the thing that I need to build even to run my business. And so by the time I got to that 6 years, that was an aha moment. It's like the thing that I built, which is so painful, so difficult, but the knowledge that we gained in that process was actually the most valuable thing that I had. It wasn't the fact that I was selling small businesses or able to let people invest in small businesses. It was that I figured out how the backend should work if someone wanted to sell any securities to anyone else. So the idea of that was in the Republic, when I joined Republic, is like, hey, let's work on this together. So initially the idea of Brassica was a corporate project. It's like, we know that this will solve a lot of problems for companies like Nextseed and Republic. Let's see where it goes. So it was a small company investment. So while I was running, what I had to do at Republic, and to your point about,
sorry to interrupt, but this is during
Republic,
your role at Republic.
At the same time, exactly. Yeah.
And they knew that you were doing this?
Yeah, so I had dual roles. One was just more prominent than the other.
Got it. Okay.
But I mean, because it was really my part of my role was, how do we keep improving the infrastructure, right? Like, you cannot improve the infrastructure. So you cannot actually improve your business in the financial world unless you improve the infrastructure. In the private world, there is no private world infrastructure, so you have to keep building it. So as we were working on that solution, just on the back end, and there's a couple of things, not to be so technical, but you basically need custody of client assets if you want to basically have flexible management and trading of those assets. And you also need a transfer agent, which is, again, a third-party regulated service that verifies of beneficial ownership, right? So unlike stocks, public stocks, private companies are much more, there's a lot less.
Correct.
So who owns what is so much more important, and what percentage you own of a company becomes so much more important than like one stock of whatever the thing is, because there's no liquid price. So those are the issues that I kept thinking about. And in short, as we started making progress on Brassica, it was very clear to myself and Republic CEO and other stakeholders that, like, we're onto something. Right, because clearly we see the path. Like, for example, we started an application with the Wyoming State Banking Commission to form a trust company for reasons we can cover later. But Wyoming has I think, some of the best digital asset protection laws.
Interesting.
So we started that process, applying to Wyoming. We applied and received the SEC transfer agent license.
Right.
And as we started kind of piecing these things together, I mean, it was just like, again, the light bulb, like,
Sure.
this is really interesting.
Yeah.
And long story short, we're right, because when we did kind of present that idea to third parties and venture capitalists, now they were very interested. And in short, we received third party financing to spin out that business from the corporate venture it was at Republic. And so earlier this year, Brassica became an independent company, where Republic and Nexi, the former groups, remain a very strategic partner. But this is now an independent company, because now we're not just trying to solve the problems that investment platforms had. Now we know, especially given what happened in the crypto industry, which we can talk about.
Right. We're going to talk about it right now.
The market is not only massive, but it will continue to be growing infinitely.
Right.
Right.
Right. No, that's quite a journey, and I think you had a pretty sweet deal with Republic. They let you do all those things.
I mean, Republic's been. I mean, they're still. I still serve on the board, and,
Right.
and they're obviously a very, very important part of my life. But I think it's the thing I respect most about Republic, frankly, any startup entrepreneurs and any companies, but just given that I was at Republic, they value creativity and they value innovation, which is something that every single organization says.
Right.
My old law firm said it.
Right.
But very rarely do organizations actually
Right.
do that. Right?
Especially when they get a certain size.
Right. So from a culture, and this is from a company business perspective, and this is more management issues that I think about a lot, is like, you have to let your people and your team innovate and fail, and literally not punish them if they fail. Right. And so that's a management lesson that I've been learning over the years. But that's the one reason I think Republic's been so successful is it from the top down, from the CEO to the entry level employee, that spirit of innovation is something that we really value.
So I want to talk about the technology itself.
Yep.
But I want to preface it with, because our audience is from a large, diverse background pool of backgrounds and professionals and non-professionals as well. But when we think about Web3, which was a real hot word a few years ago, you may think about NFTs, right? Those fungible tokens. When you think about blockchain, people would say Bitcoin, right? That's the first thing you probably think about psychologically, because that's how it blew up, because it was associated. So Web3 to NFT, blockchain to Bitcoin. Let's take the speculative stuff, NFT and Bitcoin, out of it, and let's highlight the underlying technologies, Web3 and blockchain, and how you're using that to build infrastructure.
It's actually, so a lot of people get scared of those terms. And when I say a lot, I mean a lot of very, very smart, very, very wealthy, very, very intelligent, sophisticated people. Everyone has their biases. So what I try to tell everyone is, look, it's just another piece of technology. Just like internet, it's kind of crazy, because I still remember, I'm still, I'm I don't even know if I'm a millennial or Gen X, like somewhere along those lines. I did not have internet when I was growing up. I did not have cell phone when I was growing up. I remember those, CDs from AOL, right? And then like do the dial-in stuff. Whereas today it's great. This is exactly the same thing. Blockchain is just another technology that came. So it's completely ludicrous to like make a judgment on day one of this new technology. The easiest way for me to understand, or for me to explain blockchain, is that if you think about internet, and the most amazing thing about internet was the transfer of data, right, from point A to point B instantaneously, or maybe even not instantaneous, like, because AOL was a very slow process, but it was the ability to move information and data much quicker than what it was before, much faster than letters and whatnot. So if you upgrade that concept to blockchain is technology that allows transfer of value.
Right.
Which is very different than data. So data is just like, I just know something, I'm going to communicate to you. Value has to be fixed. Value cannot be copied. That's forgery. Right. So value means like only one person can have it at a time. Blockchain allows me to transfer value to you So whatever value I had, I can give that to you. And guess what? We did not need anyone else. Because right now, if you the most basic analogy to think about it is escrow agents for cloud or title companies or real estate transactions, right? Whenever I'm transferring value of my title of my house to you or car or whatever, or and whenever we're obviously they're not gonna get money from you and not like there's a whole process of title companies and mortgage companies and escrow agents, like all this kind of stuff. What is that? All that is to basically assure you and me to like trust each other.
Right.
And we're gonna pay a lot of money to these other people just so we can trust each other.
Right.
But if using blockchain and using blockchain technology, I can actually transfer value to you, and we didn't need any of these people.
Right.
I mean, that's pretty amazing, right? So like that's always what I got out of blockchain is like it is the transfer of value, and if you can transfer value from party A to party B, and dramatically reduce, if not eliminate, the intermediaries, now we're talking.
Yeah.
And especially in the financial industry that I'm coming from, where I was myself intermediate. I was a broker dealer. Like, if you think about all the people and firms that are involved in a financial transaction, like everyone needs a cut. That's why things get more expensive. And so like that's kind of why I was always interested in blockchain. And so that's kind of how I say about blockchain. These other terms, I think terms changed a lot. I mean, Bitcoin is a cryptocurrency. Cryptocurrency.
Yeah.
I mean, we'll just cover this just briefly. Cryptocurrency is literally just a small part of the blockchain industry, in my opinion, anyway. And we already see the impact of what happened the last few years. Most cryptocurrencies are, in fact, not doing well.
Right.
And essentially, there's Bitcoin and Ethereum that are kind of, I mean, if not predominant, like almost all of the transactions happen.
Have you heard of a thing called shitcoin?
So this is, I mean, like, the world will evolve. The world will evolve, and frankly,
we're gonna bleep that out for the podcast.
Companies like us, but really other entrepreneurs as well. And this is why the entrepreneurship and the startups in the Web3 space, Web3, by the way, is people, it just refers to the blockchain industry. People just call it Web3. It's growing, right? Because even though some people might not think that those ideas are valid, the reality is that there's a piece of technology that allows people to transfer value to one another at very low friction. And so I think that's never going to stop.
So that brings me back to one of your thesis, if you like, about the advancement of digitization and finance.
Yeah.
You tend to think that Asia is going to lead that, right? And it's ever so important for us to build technologies like Brassica here in the US so that, why?
I mean, so this is really complicated. I think, I mean, one of the things that now, as I'm about to enter my 40s, I think back to my personal life, and the thing that I'm really appreciative about my own experiences, and largely it was my parents doing, is that I was exposed to different cultures, and I was exposed to different parts of the world, because everybody does things a little differently, but everyone kind of cares about the same thing if you look at every culture. And so what I mean by that is, if we're thinking about let's call it money or wealth or economic activities. And again, we saw a big impact in COVID, where basically, in the 80s, 90s, 2000s, everyone loved globalization, right?
Yeah.
And then if you look at what happened over COVID, everyone's like, oh, that sucks. Like, let me do everything in the backyard. And so now everyone's becoming a national kind of protectionist, right? Now we're in this new world where, like, is that really sustainable? Like, there was a reason why there was, allocation of resources and industries around the world and whatnot. But if you can't actually move value or things around, like, how do you do it? So the way I think about potentially what the future could result in is that I think there's going to be a lot of different ways people transact with each other. However you do that, or however that could evolve into, because I don't know either, I don't think the traditional financial system can support it, right? I mean, the bad way to look at it is when there are sanctions, obviously banks are actually cut, and therefore that's, frankly, what the criticism is. People think crypto is used for illegal activities. And then, if you have a bad intent, you can use it for very bad purposes as well. But it can also potentially be used in good ways. It can potentially be used to solve structures or inefficiencies that exist today. And that's where, frankly, regulations come in. And this is where, I mean, this topic is so complicated. I can talk forever about this. But just to summarize it in a nutshell, it's the fact that I do think that global interaction and economic activity is necessary for human civilization to survive. And because the current financial system doesn't support it, and moreover, because the regulatory issues have additional impact on that, and we see that specifically in, whether you like it or not, the SEC enforcement issues and frankly, the Federal Reserve and just
Central banking.
Just all the pressure that's on the traditional financial system. Something else has to come about. And I think the way to do that, and I use the term Web 2.5. So I often say Brassica is kind of like a Web 2.5 company. It is not hating on the fact that there's regulations, as some in the hardcore crypto industry do, but accepting that as a matter of life. Like, I had rules when I was growing up from my mom and dad, right? If I live in US, I have to follow the US laws.
Right.
While I'm doing that, how do we actually leverage the technology that is happening in a way that I know I can defend and protect and actually convince my regulators, my parents, that this is okay? We're not going to do it for a bad purpose. And that's kind of the philosophy of how we build Brassica, is we're going to follow the rules, we're going to follow the systems, and we're going to be the best at it. But we're also going to be really, really innovative in how we leverage technology, and we're going to be very open about it. We're going to communicate it with the regulators, because we know that we have to run that business that way in order for us to be sustainable.
Got it. Okay, now that we know what Brassica does, can we talk maybe about the users of it? Can you give some examples of users?
Yeah, so this is really why it's interesting, because again, when I started Brassica, the use case was online investment platforms that had potentially, thousands, if not tens of thousands, 100,000. Republic has, for example, millions of users. So what is the infrastructure solution that can create individualized custody accounts for a potentially unlimited number of users?
Yep.
So that's the obvious use case, and that is still, from a technology perspective, that's the most early adopters of Brassica, is that kind of, let's call it, online-enabled investment platforms. Because for them,
give some examples of that.
Republic's really a good example, but really, what I did at Nexi as well, because there's regulation crowdfunding and regulation A are new rules under the Jobs Act that was created that lets anyone invest in a private
asset.
Yeah. And if anyone just Googles, investment platforms, investment crowdfunding, there's so many out there now, and it's all by industries. There's like startups, there's real estate, there's royalty rights, there's even energy stuff. But the thing, I know this because I started. If you actually look at any of those websites, like, everyone's user experience is very different.
Sure.
And a big part of it, it's not that they suck, it's actually that their vendors suck.
Right.
Because for that platform to actually offer that kind of service to their end clients, because they're not regulated as a trust or a custodian, they have to find a trust company that will help. They'll hold their customers' money. They need to find a transfer agent that will track the cap table of the asset or the beneficial ownership of that asset. They'll need to find payment processors. And that combination, or that forced combination of vendors that don't really work well, was the pain point. So that's what we're trying to solve as Brassica, is like, we're a one-stop shop where you just come to us, and because we have all these things underneath our hood, you can pick and choose what you want and build a business model you want. So that's our vision. But the use case now that we're seeing is actually, yes, there's these online groups, but now it's interesting. There's very, very traditional RIAs and private equity firms and even VC firms are like, you know what, this is interesting. Because guess what? I also have investors, they call it LPs or whatever they want to call it. They need custody accounts for their LPs,
right?
Because their LPs also need a place to store their money. And if they, especially real estate, if it's a regular distribution, they want a place to send the investors distributions back.
Right.
And what they don't like, and so some of our clients are already like multi-billion-dollar real estate developers. What they don't like is having 5 back office people literally on the phone with their clients, be like, "Hey, where can I mail your check to?"
Yeah.
Right. And where do all this stuff? Versus like, oh wow, I can have a platform and I just move money here, and yeah, it's your money. You can take it whenever you want, but I don't need to do anything about it.
Right.
So we're actually seeing a lot of use cases from traditional players, traditional RIAs, traditional wealth managers, actually, who want to give their clients alternative assets, because their clients are asking for it too. They don't, especially in this environment, they don't want them to just be in their stock market the whole time. Until now, even if they wanted to do that, they had nowhere to go because they couldn't find a custodian where they can put an alternative asset, a real estate interest or IRA or whatever it is. And so that's kind of really interesting to see now. Yeah.
Cool. And then so you also have a Brassica Ventures Can you talk about the relationship between the operating company and this?
Brassica Ventures is a VC practice that we have as well as part of our company. It was actually a business that we run that we started at Republic, or at least I started. I was head of Republic Asia after I stopped working as COO, and when my goal for that was how do we talk about Asia, I think we kind of skipped that point. All these technology things that we're talking about, basically, things are happening more and faster in Asia. Like that's a fact. Right. And it's getting even faster.
When you say, is it excluding China? Is it
excluding China?
Okay.
Yeah, I mean, so yeah. China has this one. So I would say non-China,
like
Asia.
South Korea, Southeast Asia, Thailand,
South Asia,
Vietnam.
Japan, like that whole area. Number one, Indonesia, Malaysia, Southeast Asia especially is massive, right? And Vietnam is the new China as far as the manufacturing. So basically, with
Don't
the regulatory,
forget Bangladesh. That's where I'm from.
With Bangladesh is actually, that's the word we talked another, but I stayed in Bangladesh for 2 weeks.
Okay.
At a microfinancing compound, and that was the impetus for me to start Nextseed. It was
Really?
like, if you can actually do microfinancing in Bangladesh and help communities survive.
You should have told me that before. You would have been my second guest.
Why can't this work in the United States where we have so much money, so much more people, right? So that's actually Bangladesh is a sweet spot for me. But going back, so especially with the U.S. regulations being the way it is, there's a lot of Asian economies that are investing heavily, even if they're suffering too. So, for example, like Korea has the very first STO, security tokens regulations, that is very, very different than how SEC looks at it. Vietnam and a lot of emerging markets are actually the biggest. I think the top 4 Bitcoin users around the world is literally like Asian countries. And so if you look at those trends, to me, if someone can figure out the infrastructure that enables this new economy that we just talked about, and that's the beauty of tech, that infrastructure, if it's tech-based and online internet-based, it can work anywhere. So it doesn't matter where that technology was built. If it works, it can be spread very rapidly. So that's our insight. In my personal background and my team's personal background, we have a lot of Asia-US overlap. So we built a VC fund as a thesis on behalf of Republic to start, how can we invest in this infrastructure area for these alternative assets, especially with the crossover bridge between US and Asia, because I think that's where the sweet spot is. And long story short, it's just, as I transitioned to Brassica, we brought that practice along with us. And so we still work very closely with Republic, but it's a VC arm. But it's relevant to what we're doing because in both ways, being an operator and having literally gone from the zero stage, like I know deeply what it takes to be successful. At least I'm sure I'm biased, but at least in my way, I've seen it, I've done it. So I kind of recognize when a startup's potentially doing well that like, oh, this guy or this girl is doing well. They need X, Y, Z. Let's support it and let's grow. But the flip side is, even Brassica, as much as I think and I hope we can accomplish, I clearly, again, what I was saying, like we cannot do it by ourselves, right? No one can ever do anything by ourselves. That is a very big ethos in the Web3 community, is like you got to work together. And so having a VC fund doing early stage investment allows us to get exposure to different ideas and different teams and different technology that we would either not even know about or not know what to do with. But that feedback loop allows us to kind of think ahead about, okay, like we do need this, because now come back to Web 2.5, like there's this random technology in Web3 DeFi that is so crazy, so cool. Guess what? You can't do anything because the law says it's illegal.
Exactly, yeah.
So from our perspective, okay, so how do we make it legal? How do we restructure, reposition, or integrate the technology in a way that maybe we can actually go to SEC and say, hey, I think if we use this in this way under this whatever, like maybe we can do it. So like that's kind of what we're driving toward, is this Web 2.5 environment where all we're trying to do is to make a better service, make a better user experience, and we know the technology has to be built, and it's definitely not going to be, no offense to JP Morgan and Citibank, they're not going to build it.
Yeah.
So you got to work with entrepreneurs, you got to work with startups.
Right. No, look, I mean, we didn't say where you went to law school. You went to Cornell, right? Got great law school. You didn't, you talked about how you didn't want to be a lawyer anymore, and because it wasn't rewarding enough for you, right?
Yeah.
But you chose the most regulated industry in the world, finance, financial services.
Yeah.
Add to that complexity, cross-border finance, fintech.
Yeah.
Another layer of complexity. So if anybody can do it, I think it's gonna be you.
I mean, I hope so. I mean, I hope. What I do know, and that's something I really value, is it's always the team. It's never me. I mean, that's been my common denominator. In fact, not one, the best advice that I ever got when I was starting my company, when I was by myself, was what a mentor of mine told me, hey, you need to find a KPI or a measurement that will let you know you're on the right track. And it cannot be things like, revenues or profits, because all those is temporary. Find something else. He's like, I don't know what it is, but find something else. What I quickly realized was my KPI, and it's been that way since I heard that comment or advice, I need to find people who are smarter and better than me that's willing to work with me. And to me, if that keeps happening, it means I'm on the right track, because like, at least I'm not the only dumb person in this room, right? Like, so that's been my driver. And I mean, true story, even Brassica, like when I did join Republic, I really thought, because Next was so hard, like I'm done with startups. Like I can't do this. Like, it's not fair for my family, like whatever. But when I started the idea of like Brassica and just like talking about it, like, again, people that are smarter than me that I really, really respect, like they were telling me, hey, like, let's work on this. Like, I want to join you. I want to quit my job. And when I got a few of those people to join, like, as I said, like that gave me the confidence. And that's still what I think. Like, if I can find, whether it's an investor or employee or partner, whatever it is, like people that are better than me wanting to work on this thing, I know I'm on the right track.
Nice. So that kind of answers the question of why you do what you do, right?
Yeah.
But what would you say motivates you?
To come full circle, it's probably why I left law in the first place, which is I do want to, it sounds cheesy, but I do want to do something meaningful. Especially as I get older, I think I'm a little more, I'd like to believe I'm more zen. In the sense that
I remember you not being so zen before. Yeah,
I mean, like especially startups, like you're just like, so you're in this rat race, and I'm sure, I mean, the same way in law firms as well. Like we all chase things that we think matters, and I think, again, to me, COVID and the recent events like definitely had an impact. Like, does it matter? Like, does it literally matter when your family members pass away or your friends get, just like, it doesn't. And so for me, especially now, what I try to think about is like, I just want to do something that matters. And to me, everyone has different talents and interests. For me, like, exactly your point, like, yeah, like, you don't see me trying to build a rocket because I can't, right? I can't do anything engineering or oil or energy, all these important problems of the world. Yeah. But at least this is what I'm good at, I think, is like, I was a lawyer for 8 years. I can read the law, I can think of new ideas, and I can try to build some technology solutions around it, or at least help tell people about it. So I'm just using my own talents, whatever my capabilities might be, to the problem that I think matters, which fundamentally, as I said, is, and what I want to do is democratize finance to create opportunities. Like, fundamentally, I think the best way for anyone around the world, not just the US, to create opportunities, you got to build wealth. And if you think about how do you build wealth, you're not doing that by just investing in whatever, if you even have access to a stock market. Like, you just need to be able to invest, I don't know what it is, something, and create value. And for us, if we can help create that infrastructure that enables more people to have not just access to alternative assets, but frankly, the peace of mind, right? The peace of mind that their assets are safe, that's cool. So that's what I want to work on. And that frankly is the mission statement for Brassica. It is to enable global growth, or to build infrastructure to enable global growth while securing customer assets. And so that's kind of what we try to do at Brassica, is how do we protect clients' assets, but enable to create infrastructure that will help the global economy grow.
Awesome. So, Youngro,
yeah.
Thanks for doing this.
Thank you so much.
Ladies and gentlemen, Youngro Lee.
Hey guys, if you liked watching this video, I think you'd also like these interviews that I've done in the past with people like Anthony Scaramucci of Skybridge Capital, David Rubenstein of the Carlyle Group, Carla Harris of Morgan Stanley, Aswad Damodaran of New York University, just to name a few. We appreciate your participation, and we love the likes and subscribe that you do to the channel, because it only helps us grow and create more content for you. So hope we can continue to do that. And we love having you back, and see you soon.